Hey, welcome back to the Hub channel. My name is Brandon, and we're going to be doing the new high probability short-term live trading with Michael Wade right now here on the channel. In today's show, obviously, you guys see what's happening in the market. We're in the heat of earnings season. We're going to be doing a market review with Mike Wade. We're going to be going over his last show's trades, as well as talking about his sniper guidebook giveaway that he's going to be doing here just for you guys. And then we're going to go over our current live trade. But the most important thing right now, if you guys have some stocks you want Mike to look at, go ahead and put those in the chat right now. And we'll try to pick a couple of those so Mike can take a live look at those and see where those stocks are going. Mike, get on in here. If you guys don't know already, Mike is the founder of Michael Wade Trade Coaching, and he is one of my favorite guys to talk to about the market. I just get so happy seeing your face. He's one of my favorite guys to talk to about the market. And right now, S&P new highs, futures are up again, and the market opens up here in about 8 minutes. Mike, what are you seeing? What is happening in the market? I know we have a lot of earnings going on this week. What are you seeing in the market? What's your review looking like?
Bullish, maybe.
Yeah. That's because you're forced to be bullish. You're forced to be bullish, Mike.
I don't want to be. I love bearish markets better, but Brandon, everything's up. The S&P 500 is up. The Nasdaq's. These are all-time highs. The S&P 500, the Nasdaq, the diamonds, the Dow Jones, all of them, all-time high territory. You know, you don't need a market pundit to tell you the markets are bullish, and that's exactly what's happening. Money's flowing into the market. The markets are setting new highs. You know, here's a chart of the SPYs. Actually, let's go pre-market. You mentioned the markets are up, and you can get the futures. The futures trade 24/7 starting Sunday night through Friday night, and you can get a feel for how the markets will open. And this is CNBC. You can go right to this site. You can find futures anywhere. Dow futures, new highs on the S&P, on the Nasdaq. Oil's even up a little bit. So Brandon, markets are super hot right now. And this morning, the GDP number was released. I don't know if you saw this, Brandon, but the U.S. economy grew at a 3.3% pace in the fourth quarter, much higher than expected. That sounds really good, but the Fed meets Tuesday and Wednesday of next week, and everybody's clamoring, hoping that the Fed is going to talk about dropping interest rates the second half of the year. But when you see a hot economy, you know, that's not going to do much to curb inflation. And so that could lead to an announcement on Wednesday. This is next Wednesday. Powell will speak at 2:30, and everybody's going to be watching Brandon. God knows what he's going to say, but if it's deemed as negative, we're not going to cut rates until 2025, anything like that, and we could see quite a big correction. Or if he flags interest rate cuts are coming soon, then we could see further upside.
I agree 100%. We're going to be watching that Fed meeting, and I agree with you. I don't think they can cut rates now. I don't think they can, because given the amount of inflation and everything, the economy is doing great. If they cut rates, I don't know. I just don't see it happening. And so, just like you're saying right now, I think we're going to see a little bit of a dive in the market when he comes out and basically verifies what we know is true. It's so silly how this whole thing works, but we all know what's happening. We can all see it, but we have to wait for his words before we can actually react. What about last trade? I know we put a trade on last show with TSM and BITO. How are those trades going?
Well, here's the trade on TSM. I use a piece of software called Tom's Option Tools. And I literally, when I place a trade, I create a picture using this software. And you can see here, we placed this trade just last week. And Taiwan Semi came out with really good earnings, announced, raised their future guidance. You know, as you mentioned, Brandon, we're in earnings season. And the fish are jumping in the boat. If you can catch a stock that has great news, great earnings, list forward guidance, that's what happened. The stock gapped up. We placed a trade in the morning. Let me take you to the day we placed the trade on the 17th. And I know this risk graph is, you know, it's a picture and it takes a bit of time to understand it. But we placed the trade on the 17th. And then by, 2 days later, we were up 4.5% already. And then our rule is to close these down for 10% of what we sell them for, capturing 90% of the maximum profit in the trade. And we did that on the 24th, Brandon, and we nailed that one. That was like a successful snipe from a far distance. The stock rose. We closed this down Monday, and we nabbed about 12.5% in 6 days, 6 calendar days. You know, the average hold time on these is generally 8 days or so. We win 90% of the time typically. And the idea here is, 12% doesn't seem like a lot of money, but if you're doing that every 8 days with high probability, then, triple that each month. I don't like to say stuff like that, but it's like getting on base, just get on base, get on base, get on base. You get struck out once out of every 10. And that's this system. It's fast paced. It's short term, it's high probability, and it's one of my favorite games to play.
Well, you bring up your system. You do have a guidebook, right, Mike? And outline for me a little bit this guidebook. It goes through what exactly and why do people need to get this guidebook in their hands?
Well, yeah, this show is a live trading show. It's fast paced. And especially when the market's open in 3 minutes and we do live trades. So I move pretty fast, and that guide will take you through comprehensively every single thing I talk about here, including risk graphs, including generating your lines in the sand, how to construct the trade, close the trade down, and even a bit about money management. So it's a really comprehensive guide, and it's free.
I love that word. It's my favorite word, especially when I'm trying to get information out of people. Free information is the best information, but this is valuable information. And you talked about that line in the sand that you set up. You go over that every time we put on a trade, and you're going to see here in just a second, because we're going to be talking about a live trade here with Mike in a few minutes. But that line in the sand is super important, because that's the line that you're saying, that's where you think the stock's going to go, not go back to and stuff. And so it's an important line. And Mike, I know that we do have the market opening in a couple minutes here, so why don't you set us up for your trade that you're going to be putting on here for the week before the market opens, before things get a little bit crazy? Because once that market opens, I watch these options in your trades, and I watched Taiwan Semi last week. I've been watching it over the week since you put that trade on, and it's been doing some fun stuff, obviously, and I think you called that trade perfectly. But these options, right when the market opens, kind of go nuts. So let's get this thing set up right away so we're getting in position to trade this thing.
Yeah. And that, one of the hardest things this morning for me, Brandon, was picking one. IBM is one of two that I really like. Now, IBM came out with, they blew their earnings out. We like stuff like that. They raised future guidance. They cited their AI technology, Watson. You ever seen Watson on the TV commercials, this AI god that can do all sorts of analysis and predict things. And so IBM is jumping on the AI bandwagon with both feet, and the stock pre-market. Let's go to I'm going to go to a minute bar here. Let's go to a 5-minute bar. And so IBM announced, and then the stock. This is pre-market. This whatever that color is there, gray. Let's call it green, gray, whatever it is. That is post-market yesterday, so the news was announced. IBM skyrocketed after the news. This is the market open this morning, pre-market, and right now IBM pre-market is trading at 185, let's call it. All right, so that's where IBM is, and we'll open in about a minute. Now, and you're going to see it in just a second. IBM's going to open up right about here at 185. There it is. You can barely see it. So, line in the sand is really a support level, if you want to get technical. But here's what I think. I don't think, with all of this positive news, with tech hot, with AI hot, chips are hot, tech is hot, the XLK, the ETF that tracks the tech industry, is at all-time highs. IBM is not at an all-time high, but it's well above 175. So the news should keep the stock rising from here, but certainly I wouldn't expect IBM to drop from here given that positive news. So what I want to do is stay as far away from the heat, and I pick round numbers that correspond to support and resistance, and I call those lines in the sand to make it a little more colloquial, that help people not to get too intimidated by this process. So that's the line in the sand, Brandon. The market's just opened. Everybody knows what happened to IBM. Option traders are coming in. I want some options on IBM. And market makers lift the price in the first part of the market in the morning. So we can come in right now and see what we could get if we sold a credit spread that would make money anywhere above 175. What does that mean? Stock rises, you make money. Stock goes sideways, you make money. And as long as IBM doesn't drop back down from whence it came within the next 2 weeks, we're going to snipe some nice profit. So that's the idea. Super high probability trading. And indeed, that's why we're getting in the neighborhood of 90% returns, or win rates on these. Now, what I'm doing here is I'm using an online broker platform called, I had a senior moment there.
No, it's Thinkorswim. That's what it is,
That's
Mike.
Thinkorswim.
That's
Yeah,
it.
I say Thinkorswim 10 times a day, and for some reason it just
I know. I've
Oh
been
my
there.
gosh.
Trust me, you.
Oh, I'm glad it's not just me. It's a stimulated trading environment, and it allows me to trade in front of you, and that's why I love it. I'm not recommending you trade Thinkorswim, but it's a really good platform. So I'm going to quickly go after this thing. Here's what I want to do. I would like to sell the 175 put and buy one underneath. I'll come back to this. Well, let me just go into the spreadsheet real quick here. So this is a 2.5 point spread, and right now I can get about 40 cents for it. Now, the longer I talk, that price will start dropping if IBM doesn't drop. So I've got to move a little fast. So this is a 2.5 point spread offering, let's call it 40 cents. And so what I want to figure out now is it worth it for me? All right, so all of this stuff is in the guide. So I'm going to move a little bit fast. What I'm trying to do here is calculate the potential return on investment I can get in this trade if I sell this credit spread so far away from the stock. I can still make 18% on this trade. I'll come back to the math here in a minute. I can still make 18% on this trade. So if I did one of these credit spreads, my max risk would be 211. All right, so if I did two of these, then my max risk would be $422. Let me come back to that and explain it in a minute. I want to get this credit before it evaporates. So I'm going to go back in here, and indeed, it's gone. All right, I'm going to still put a line in the water, though, Brandon. And there's another one I want to look at as well. So
now, how does a line in the water differ from a line in the sand? Does a line in the water kind of a moving line? Is that what you're talking about?
No. Think of it as like fishing, right? I'm going to put a line in the water.
Yeah. I got you. Okay.
I'm just going to say, hey, may I please have 39 cents? And they're either going to give it to me or not. And what you'll notice here is that both of these are debits. So they're in the morning, don't get distracted too much because the prices will vacillate a lot. I'm just going to stick it in there for 39 cents. I'm going to do two contracts, and then we're going to look at another one. We'll try two trades today, Brandon. I'm going to put that line in the water. This is a 2-week trade, selling the 175 put, buying the 172.50 put. I'm going to ask 39 cents, and it's either going to give it to me or not. Stock's currently trading at 188, so it's actually risen since I started. So what you can see here very clearly is if I wasn't teaching, I would have been in this trade for 39 cents. So if you like this system and you find a stock that moves pre-market, those are the best. Have your order ready at 9:30, go in and snipe some profits. All right, that's the best time. Now you can still do them later in the day, but there's a little extra juice in the first 30 minutes of the day. So I'm going to put it in at 39 cents, and we're just going to put that line in the water. We got a line in the sand, and we got a line in the water. That's showing it's worthless at the moment, so we're going to have to hold on IBM and see what happens. Okay, now I have another one on Humana. Now, this sounds a bit vampiric, but bad news, especially terrible news, are the best sniper candidates. And Humana dives on a huge, the word huge was used by Investors Business Daily today, a huge warning. They came out, I mentioned this last week, but they came out with a pre-earnings announcement here and said our earnings are going to be really bad. The stock dropped. And then this morning they announced earnings, and guess what? They were really bad. And so now the stock is all the way down here. They lowered future guidance. They cited expanding healthcare costs, Medicare costs. I forgot the name of the program. Medicare Advantage costs, which I guess that's the company that provides Medicare Advantage. So the costs of that program are eating their lunch, and the stock has tanked. So the next question is, what line in the sand am I going to use? All right, so I like 400. If I can get anything at 400, I'll take it, but I might come down as low as 375. Let's just see what's there. I don't know what's going to be there. I do know that the options will be very expensive. There's blood in the water. Option traders want some Humana, and they're going to be paying extra for those options. Market makers are lifting the prices. So let's just go take a look here, Brandon, and see what we can actually get. So I'm going to come in here to Humana. I'm going to go into the trade, the option chain for Humana right here. Let me get rid of that there. All right, again, I like 15-day trades, and I've got this set up as vertical spreads, and I can kind of quickly see how much profit might be available. And 400 is where I want to go, and I can already tell there's no credit there. And so I could drop to 375, and that gives me 70. No, now it's gone. See that? I'm going to put another line in the water at 375, though. Here's the problem that we have when a stock drops so hard is there's really no immediate signs of support and resistance. So when I see that, I generally will use round numbers, 375. Look here, Brandon. The stock has bounced off 350. It dropped, opened here. Let me zoom in a little bit. That would be useful, even for my eyes. The stock opens here, and then it drops all the way to 350. The low of today so far is 350, and it's bouncing. All right, so already starting to rise. You know, they've got taken behind the woodshed here, and then again, maybe it's overdone. Buyers are coming in at 350. I wouldn't get any closer than 375 on this bad boy for now because there's support right here at 350. All right, so let me go see if 375 is going to give us any money here. I'm only seeing 20 cents, 37 cents. Let's see. I want to figure out my minimum. So if I got 50 cents on this 10 cent spread or 5 cent spread, $5 spread, if I got 50 cents on a $5 spread, 375, 380, that's $5 between. Now it's showing me 65 cents. Let me just take a look at the stock again and make sure it's not recovering too much. All right, I'm a little concerned that it might recover to 375 given this bullishness here. So let's go up to the bottom of this bar at 390. And here's what I'm going to do on this one. I am going to let this just sit. Again, a line in the water. And let's see how much I want to try to get for it. 390. I know I'm moving around a lot here. If I can get 25 cents on this. If I can get 25 cents on a $2.50 spread width, that's going to be, max risk is going to be 225, and that gives me 11%. So that's the minimum I'll take. I want at least 10% credit and at least 1% possible ROI per day in the trade. So 10% is sort of the minimum. 10 cents credit is also the minimum. So I can just stick that in, a line in the water again, Brandon. And I want 25 cents. So that's the thing about this show is, you know, it's, and how many contracts do I need? I need 2 contracts. And that's another order just sitting out there. And I'll let these sit the whole day. So here's IBM. I want 39 cents. Only going to give me 6 cents and a half. And then we got Humana at 390. And I'm going to let those sit for the day. I'm not prepared to lift the IBM put credit spread too much from here. And 390 is about as low as I want to go on Humana, given that it's bouncing this morning. So Brandon, that's trading. That's how it works. Sometimes we get right in, sometimes we have to be patient. But I think given that we still have some time left, Brandon, why don't we take a look at some of the trades from our community here that's come and joined us today?
No, that's a great idea here, Mike. And just looking at those trades, it's funny you mentioned IBM and them putting AI. That's what everybody's doing. They're just tagging AI in onto the end of their name, or they're putting AI in their new marketing plan going forward. And that's the easiest way for any company right now to gain $1 billion valuation increase. And so it's kind of funny that you did bring that up. But yeah, let's check out a couple of stocks from our community here that they want to take a look at. And the first one, let's look at WAIT, W-A-I-T.
Wait a minute. W-A-I-T.
Wait a second here. Maybe it's not pulling up anything. Oh, actually, let's just do LUV, L-U-V. How about that one? L-U-V.
Southwest Airlines. Yeah, I happen to know the news on this one. They have these 737 Maxes, and they're going to lose $150 million on revenue. That's what I read. What's happening here? Look, the stock's up. Now, I need to know the news. I thought I knew the news, but obviously the stock's up. Let's go ahead and a good place to find news. There's a lot of places. I go into Yahoo Finance, and you can just go ahead and type the symbol, and then you can see the latest news. So American United soar on earnings, airline stocks gain altitude, Alaskan provides Boeing update. This is what I saw this morning. And Southwest Airlines removes MAX 7 from 2024 plans. Let's take a look at that news. Technically speaking, there's a lot of reason to do something with this, but I want extra probability with love up big. I want to make sure I see some positive news around Southwest Airlines. Take fewer deliveries of the MAX. We know that. All right, so that's not really necessarily bad news, but what I'm seeing here is that Southwest is up because, let's go to CNBC as well. I think I saw it in CNBC as well. So I don't see any solid news. I'm going to go into another place that I look at for news, which is Thinkorswim, actually. And they have a really good news feed here. Just going to check through here. Okay, they beat earnings and stock rises after results. Adjusted profit revenue rises, beats top and bottom lines. So they had some good earnings. Ideally, what I'd like to see, Brandon, is that they lifted their future guidance, and I'm not seeing that. Doesn't mean I won't take it. But anyway, that's good news. That's good news on the stock. So the next step is, what's my line in the sand? I like 30 right there. I like 30. Why am I liking 30? Well, we call it lines in the sand, but really it's support. So you can see here, resistance. For a while, institutions weren't ready to take the stock back up above 30. And then they are now, though, 3 days ago, the stock started rising into earnings. It's hit 32.50, which is also resistance. Looks like it might be coming down a bit. So this is a decent one. I don't like to sell these credits when there's resistance keeping the stock from rising, which has happened today. So I'm going to be cautious with this. 30 is as close as I would get, but maybe a little lower. Maybe a little lower to give myself a little extra protection. The stock will not likely drop below 30 because the news today is much better than it was yesterday. So that should keep the stock from dropping too far if it does. But let's just take a look and see what's available on Southwest. Since we didn't do a trade on the others yet, I'm going to go after this one. So let's see. So a line in the sand is 30. I want to make money above 30. Stock goes sideways, I make money. Stock breaks resistance, rises hard, I make money. Stock drops no lower than 30, I make money. Up, down a bit, and sideways. That's 2.5 of the 3 places the stock can go. Already super high probability that we're going to be okay on this one. Let's take a look at 30. So I want to sell the puts, Feb 9s, 15-day puts. I'm going to sell the 30, 29.50. There's 10 cents there almost. Let's try 29. There you go. I would be willing to take that trade. Let me go ahead and place it because I don't think we're going to get filled on the other two. So this is a 1-point spread. And looks like we can get about 16 cents on it. I'll come back and explain these calculations in a minute. I've got to move fast. So that gives us about 7%, not quite enough. That's not right here. That's my spreadsheet is all messed up. So that's a nice little return. That's a 20% potential return at 30. Now it's at 18 cents. Why? Well, Southwest is probably dropping again. It's dropping. So I'm a little bit concerned about it dropping. So what I'll do now, Brandon, I know I'm moving all over the place here, but this is how it works. Let's
No, I get that. And it is dropping quick. I would move that line too.
Yeah, thanks, buddy.
Just watching you. I mean, I'm moving that line because I'm watching the chart as you're kind of going over this, and it's like it's got me a little bit concerned putting that line where you kind of put it. So I like 29 better too.
I do too. Yeah, it's coming down. See, this is the other rule I have that's sort of a nuance. When you have resistance, that keeps the stock, and it has today, from rising. It was support resistance over here. Support then became resistance. That it hits this prior level right at 32.50, and now it's starting to take a bit of a break. Now, it makes sense because there was some profit realized into earnings, and now the stock is coming down just a bit. So let's see what's available at 29. Now, it's not, let's try 28.50 as well. So I'm playing with the spread with 4 cents on 50 cents of risk, not a lot. Let's go up to 28.50, 29.50 then. This is why you need the guide, because there's a lot of moving parts. And I have to always work on calming myself down because I get really excited when I do this strategy because it's, there you go. There's 12 cents at 29.50. I'm going to take that. So now I've got to calculate the number of contracts. So we get 12 cents. Our risk is 88. There's 14%. And if I did 5 contracts, I would risk 440. So I'm going to do 5 of these. Brandon, I want to make sure everybody knows that there is a recording of this session that will appear once it's posted, and you can go through the recording with AI transcribed summaries and links to certain parts of the recording. So
I'm glad that you brought that up, Mike, because some people get caught up in the speed at which you're going through things. But yeah, that is good to remind people, but they can go back, kind of pause, think about what you're doing for a second, and then push play as well and keep going through this thing. I do a lot of videos where I'm trying to explain certain mechanics of like crypto and things like that, and people get caught up with that, and you're going too fast. And I'm like, you can always pause a recording. So that's a good thing that you brought that up.
Yes, indeed. All right, I've got it in at 12 cents. I changed it to 12 cents with Southwest dropping a little bit. There's a good chance of a fill on that one. And at 12 cents, this is what it would look like in terms of potential return on investment. So that's 14% over 2 weeks. Here's the exact trade then on Southwest, just so it's really clear. And how do you handle it is the most important part. So what I'm trying to get into is the 29.50, 28.50 put spread, credit spread on Feb 9. So this is the exact order then. So I'm selling to open the love, Feb 9, 29.50 put, buying to open the 28.50 put. I'm going for 12 cents on this sucker. And now if the stock does in fact fight the good news and drop below our short strike of 29, then here's the most important rule, everybody. If the stock closes less than the short put strike of 29.50, take your loss, and it'll be contained. If you don't, and the stock keeps rising, you could lose everything. So let's be clear that if the stock, back to the chart, if the stock closes less than 29.50, which is my new line in the sand right about there. If it closes beneath that, then close it off quick. Don't think twice. Take it out. take it off, take the loss, take the punch, move on. You're going to get punched 1 out of 10 times on average. So this is so critical, Brandon, that you follow those rules. You know, I've been teaching trading for 25 years, and every single time when I teach and coach people, they tell me, well, what should I do? I'm losing money, but I think maybe the stock's going to bounce. They invite faith and hope to the party, and faith and hope will wreck a party all day long, all night long. So I can't say that strongly enough, Brandon. If the stock closes below 29.50, pull it off, take a loss. There's plenty of these coming in earnings, when earnings season, and just follow the rules. Just follow the rules.
Just follow the rules. Don't trade on hope and emotion. I mean, that's what's always got us into trouble before, Mike. But yeah, that read was great on that suggestion from the community. So thank you, whoever suggested that. I think that was a really good read. We're kind of wrapping up here, Mike. I mean, I think that was a great session. Just like Mike said, if you want to know kind of more in detail what we just talked about, go download and go check out his guide. That guide basically goes through everything that he went through today in the trades and kind of outlines his thought processes and how he puts on trades and takes off trades and makes that line in the sand and then throws his line into the water and all that. Anyways, let's go ahead and wrap this up. Thank you all for coming to the show today. Go ahead and like and subscribe if you have not already. We're going to be doing the show every week, and I'm recapping the trades that Mike put on today. We're going to be going over those trades next week. You're not going to want to miss those, and he's going to be putting on more trades just for you guys. So we'll see you guys next week back here, same time, same place. See ya.
Bye, everybody.